Good Monday morning from Hong Kong. Half an hour to the opening bell in Shanghai and Shenzhen. Of course, a kind reminder that Hong Kong is shut for a holiday today. You're watching the China Show. I'm David Ingles. Let's get to your top stories today. We start things off in Europe, where the euro and French bond futures are up on signs that France's far-right party won a smaller margin than some polls indicated. Stocks across the region, though, here are trading with caution to start this new quarter. Traders awaiting China's private manufacturing survey due this hour after official PMI show factory activities shrinking in the month of June for a second straight month. And we'll be assessing Hong Kong's future as a financial hub 27 years after its return to Chinese rule and with national security laws now firmly in place. Right, welcome back to the show. Well, welcome to the show. Happy Monday morning to all of you. Hope you're all well rested, moisturized, as they say. We're a step closer to next Monday. Glass is certainly half full and half empty as far as that's concerned. Markets are not really doing a lot as far as equity markets here in the Asia Pacific are concerned. We're trading mixed. On balance, we are trading flat. S&P futures, though, are seeing some upside today. The Nikkei 225. We'll talk more about the Tankan survey a bit later on. But certainly the key takeaways there, better sentiment, higher inflation is expected, and also a weaker currency. All things equal, bond markets are feeling the pinch as we go into, by the way, at the end of this week, we have, of course, the U.S. jobs report coming through. There's key election risk, of course, on the table. We'll talk about France in a moment here. But speaking of here, you are seeing some gains across the euro on your screens, 107.44, 0.3% stronger. A glance at some of the more sort of specific market indicators here. So you're looking at, of course, this quite a nice rally as far as oats are concerned. We did get a blowout, of course, in the spreads going into the weekend here. Stocks 50 futures are up, give or take about 1%. You're also getting some upside across DAX, the DAX contract that has been up and running for about 45 minutes or so now. Just a reminder, of course, that Hong Kong is shut, so it's only mainland markets that are trading today. A reminder also of how we ended the week last week with the Golden Dragon Index down about 1% in the Friday session. And that takes us into where we go, of course, as far as futures go. So we're trading flat. And more on this in a moment, this unrelenting rally in the CGB market, particularly on the long end, right? So at 2.2% on the 10-year, that's now the lowest in about 2 decades. We're extremely close on the 30-year, that's about one basis point that we take out the April low, which takes us back to levels also of 2 decades ago. In fact, if you're curious what that specific level is, turn the page, please. 2.4211, I believe, is the level we're looking at on the 30-year yield. In terms of just momentum, the mainland, the losing streak, let's have a look at the agenda, please, and we're talking about that now. The longest losing streak in about 6 years on the Shanghai Composite, weekly losing streak. There we go, 2.4211%. More on the PMI story in a moment here. We get the other survey, of course, comes out this hour. And as far as data goes, casino revenues are coming out as well today. Right, so that's the agenda. Let's bring in our co-pilots these next 2 hours. So Stephen Engle, of course, our Chief North Asia correspondent, is recently back, of course, from the mainland, covering, of course, the summer Davos there and, you know, the weak economy and the PMI numbers out in the weekend certainly underscore that.
Yeah, Min Lo will be here in just a matter of seconds to run through all those numbers, but for the second month in a row below 50. Actually, 12 out of the last 15 months has been below 50. So that kind of tells you the state of confidence in the Chinese economy. I just came back from Shanghai, Hangzhou, and Dalian, where the World Economic Forum Summer Davos was held. You can feel that there's a little bit of trepidation, a little bit of pause by the consumer. Again, I wasn't there long enough to get a full feel of it, but the people I've talked to say, yeah, sure, we're kind of waiting things out. And again, not necessarily everyone's taken the cue from the government, but the third plenum now, which has been delayed by some 6 months or thereabouts, the dates have been announced. So July 12th to, 15th to the 18th, which starts 2 weeks from today, essentially. So we'll maybe get some more clues on policy support for this economy.
Okay, on that note, let's bring in Min Lo. Of course, she's been covering the PMI numbers for us. The takeaways for you.
Yeah, well, the PMI remained flat, which was in line with expectations, but it's the second straight month of contraction now, which isn't a good sign given that manufacturing is really the area that Beijing has been betting on to lift the rest of the economy. But it looks like now this slowdown in domestic consumption is perhaps dragging on the supply side as well. We're seeing the gauges for input and output prices sliding lower in June, which suggests mildly stronger deflationary pressure on the factory gate prices. And then also you have those trade tensions ratcheting up, trade barriers erected against Chinese consumers, which doesn't bode well for manufacturers as well. And then if you look at the non-manufacturing PMI, that came in slightly below expectation. The expectation was 51. It came in at 50.5. But I think the most worrying is the construction sub-index that has fallen to 52.3 from 54.4 in the previous month. And that is the lowest print we've seen since July of last year. Yeah.
Understandable to a certain point because, again, home sales have not necessarily picked up, even though all the major cities have pretty much relaxed their home buying curbs.
Yes, and in fact, home sales had fallen by 17%. The good news, though, is that that decline has slowed down because in May, the home sales had declined by 34%, so much steeper in May. And this really suggests perhaps that there is a bottoming out in the home sales for now. We are seeing perhaps those measures of easing home buying curbs from the first-tier cities perhaps showing some of its effects now because Shanghai, Beijing, Shenzhen, they have either lowered or remove those mortgage rate floors to make home loans cheaper. And that's why we saw this 30% jump in new home sales month on month in the first 25 days of June in places like Shenzhen and Guangzhou. Shanghai saw slower gains of 11%. There you go, look at the chart. You see that slight uptake in the last bit. But still, investors and economists, they think that we're not out of the woods yet. And they are really calling on the government, the PBOC, to double the amount of liquidity that they're injecting into that home buyback program to mop up those excess inventory.
Yeah, it's still negative, as you point out, but the direction of travel seems encouraging. Just to pivot to rare earths in the story that we saw on the weekend, this new regulation, what do we know?
Yes, so China just passed its first comprehensive regulation to govern the mining and smelting and circulation of critical minerals. According to the State Council website, the statement says that those minerals belong to the country. No single individual or organization can claim them, and they have introduced penalties for those who engage in illegal activities as well. So government agencies will now control the total amount of smelting and mining that goes on. And this really comes in the context of this heating up of the tech race. Obviously, many of these critical minerals are important components for things like electric vehicles and the high-tech sector. And you see the U.S., for instance, coming up with this mineral security partnership with the EU and 14 other countries, I think, to really counter China's dominance in the supply chain. China now controls about 2/3 of rare earths production, and they have a near total monopoly in areas like lithium and graphite. As you see countries like Australia and Canada really trying to get Chinese investments to really divest from the critical mineral sector. Now China is also trying to control its own domestic industry as well.
Min Lo, our China correspondent there on the big stories covering these markets as we just, of course, get underway this first trading week. Now, apart from the Caixin PMI numbers, which are coming out, of course, this hour, just looking ahead to this week, right? So certainly we're coming off, the first round of French elections, of course, and we go into, of course, UK elections, the second round of French elections, of course, over the next weekend. And before that, of course, as you can see, the agenda is, I guess, in some ways scattered with some key events here. Not to mention, of course, at the end of this week, as far as economic numbers go, it's the key jobs report out of the U.S. In terms of expectations around the Fed, we're coming off a fairly benign PCE print on Friday. Expectations are a cut, maybe 2. September or November could be the start of that. So just glad to that, of course, in terms of the agenda for this week. Right, more on what happened in, the last few hours or so in France. The far-right leader, Marine Le Pen, is in high spirits after her party dominated the first round of the French legislative elections here. She also declared that President Emmanuel Macron's party had been practically wiped out after that vote.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power. We warmly thank the voters and welcome this result. This first step towards choosing an alternative is a mark of confidence which honors and obliges us.
Derek Wallbank is with us right now. Of course, our colleague, he joins us, I believe, out of Singapore. Derek, good morning, and thanks for joining us. Yeah, so we're looking at some of these assets trading in the region. Oat futures, for example, equity futures are trading fairly encouragingly, although we're coming off quite a stark contrast from last week. Just get us up to speed on what we know.
Well, David, it's an interesting result out of France. Remember, Emmanuel Macron called a snap election here and was advised by a fair number of people that this was an extremely risky gamble. And phase one of the election has come through, and it does look like a lot of those warnings were fairly prescient. Marine Le Pen's National Front, the far-right group in France, is now coming out of round one, it appears, with a reasonably healthy early lead. It's a very complicated kind of situation in France, but ballpark, the projection puts her national rally on somewhere between 230 and 315 projected seats. There is a second round of voting, so without going into the minutiae of French elections, there's more to play here. You need 289 to get an absolute majority in the parliament, and I think that's really the question that we have here is this going to be enough for an absolute majority for Le Pen's party? They have said that they're not going to try and govern unless they do get that absolute majority. There is a possibility that there could be some sort of coalition situation somewhere, or there could be a bit of a hung parliament kind of situation. It's a lot to play out here. And one of the things that you're going to see in the coming days is whether there's going to be a sustained effort from Macron's centrist group and from the left side of the ledger, because there are ways that they can kind of work together and try and coalition their support in the runoffs to try and beat back the far right in these matchups as they go forward. As I say, there's a lot to play out here, but the headline news coming out of this is that Le Pen's far right party is at the gates of power, as Francois Hollande said after the fact, and that's a situation that, as I say, that was the gamble coming into this. Could the center, could the left hold off the far right side? Macron's own party coming out of this, his bloc in third place after the start, that is not where they wanted to be.
Hey, Derek, obviously there's political intrigue going across the Atlantic in the United States following that debate on Friday, Asia time, of course, Thursday night in the U.S., the shaky performance by President Biden obviously in focus. Where are we now over the weekend between what the campaign is saying and doubling down on the president's viability in the election and perhaps donors who are saying, look, maybe we need a change?
Well, look. The results of the debate were pretty simply seen, and you mentioned Asia markets were open. There's a company in Shenzhen that's Chinese name roughly sounds like Trump wins big, and it was 10% limit up in those trading hours. Like, that's how the market saw it. That's pretty much how everybody saw it. And you're seeing the Biden allies now, and even the president and Vice President Kamala Harris coming out and acknowledging that he had a pretty shaky debate, especially in his first 20 minutes. But that having been said, the idea that Biden would drop out looking a little bit more like a wish than a reality among some Democratic donors, there have not been calls from really serious elected Democrats that Biden listens to drop out. You've seen a lot of these calls kind of on the sidelines, some donors, some former people who used to have titles, but nothing really from real big power brokers who the president might listen to. We've got reports that that Biden and his family, who were at Camp David over the weekend, are coming out and saying that they're, he was encouraged by his family to stay in. And look, the best thing I can do for you here is read to you. There's a great story out by our Justin Sink and Amanda Gordon. I'm going to read to you paragraph 2 of this verbatim. Quote, "The strategy will be remembered as a display of either remarkable foresight or incredible hubris."
Derek Worldbank there. What a way to tease that. I'll look at that story, of course, right after this. Derek Worldbank there in Singapore for us. Just counting down to the open of trade in Shanghai, in Shenzhen, not in Hong Kong. We're on a holiday today to mark the 27th anniversary of the handover. Futures traded in Singapore a 1/10 of 1% to the upside. The opening bell 15 good minutes away. This is the China Show. Welcome back. You're watching the China Show. Your reference rate for the day, the midpoints, the fix, among the other terminologies out there, 712.65 against the U.S. dollar. The midpoint there, of course, and it's the 2% of either side of that specific level is your playground for today. We're trading, as you can see, on the weaker side, but certainly let's call it 730. On the exchange rate today. It takes us into the other big story, of course, what's been happening in France and the slight sigh of relief across these markets. And as you can see, oil futures slightly higher. The euro is trading stronger. And equity futures, as you can see in Europe, are trading to the upside. It certainly highlights the geopolitical and political risk that markets are faced with this next few days and even months going into the U.S. elections. Let's bring in Charu, Chanana, global market strategist and head of FX strategy at Saxo. Charu, good morning, and I hope you had a good and restful weekend. We're done with round one. We're going into the next, well, round two is in France is next weekend, and of course, it's UK elections too. What do you think market direction is going to look like between now and then?
Hi, Dave and Steve. Thank you for having me. Certainly, I think we are starting off in Asia with that sense of relief that the far-right parties did not get the kind of majority that was feared. But going from here, there'll be a few things to focus on. Certainly, one of the things will be what kind of horse trading or coalition, alliances that could come into the picture going into that second round of election over the next weekend. We will also be getting a lot of commentary out of the ECB, and that is obviously going to be key for the markets as well, because there's been some sense of stability for the Eurozone economy after that first rate cut. But we certainly do not look like we're out of the woods yet. And whether the ECB wants to make that second rate cut again, go before the Fed to do that or no, is the big question. So I think there's going to be quite a bit of volatility. I do think that these headline moves that we've seen coming out of this weekend's first round of elections could remain fragile at this moment, because this is more a reversal of some of the risk premium that was attached to the Eurozone assets last week.
Charu, let's talk about the U.S. Does the debate change your outlook on the U.S. economy? Obviously, we're going to be looking at the Fed, which is independent of the political drama. But again, with a poor showing by Biden and some, I guess, discord within the DNC, the Democratic National Committee, where do you put the bets on right now, and what does it mean for the economy with an emboldened Trump?
I think obviously the markets have started to price in that potential of a second Trump presidency after that debate on Friday. But certainly I think we are still a few months away from that election, and a lot can change. I think the most critical aspect of this campaign for now for the Democratic Party would be to have a very strong vice presidential candidate to really take that focus away from Biden's age and health issues and really bring the focus back on economic policies or the falsehood claims that were attached with Trump's comments at that debate. So I think in terms of the economic impact, certainly not a lot is being factored in right now, because whether we get Biden 2.0 or Trump 2.0, I think fiscal expansion really remains the theme. But really the big focus will be on the monetary policy side, and that can be potentially a little bit different between the two parties. But immediate focus, I certainly think, is what we get in terms of that vice presidential candidate from the Democratic Party.
And Charu, on the easing cycle that we've been waiting to get a better idea when it actually begins, the data's starting to come in and cooperate with that. When do you think that first cut will be? September, November, or later?
Certainly the PCE data that we saw on Friday was a big relief for the markets. There is a scope that after that Q1 inflation hiccup that we saw, we are back to kind of a disinflation narrative really taking the headlines. And this week's labor data will again be very important as well. We have started to see some cracks in the US economy, but certainly they are not at the level right now where they warranty rate cuts. I think the Fed really needs to be sure that this disinflation will continue in a sustainable manner. And I think we do not have enough proof of that right now. So that wages number coming out of that non-farm payrolls report this week and the overall consumer spending patterns, how much of a crack that kind of brings. I think there is some scope to bring forward that first rate cut expectation to September. But we certainly remain a data hawk at this point. And, things can change because the US economy has been kind of a two-lane economy where some parts of the economy continue to come out stronger, and that still pushes back those expectations of rate cuts.
Charu, what's your outlook for the yen? Obviously, it's testing 161 again right now at 160.92. No intervention that we know of yet from the Ministry of Finance, but I guess increasing bets that the BOJ will hike again later this month. What's your outlook?
In terms of the intervention, of course, the BOJ officials have been quite clear that they focus on the pace of the depreciation of yen and not really at particular levels. So 160 was certainly, I think, not the line in the sand. Whether 161, 162 is or not, it certainly, to me, doesn't seem like one because we haven't seen that 10 yen to the dollar move in a month that has been highlighted before. And secondly, I think it's been very evident with the numbers that came out that the millions of yen that they spent in April to kind of really intervene in the markets and help the yen have been so useless, and we are back to record lows again. I'm sure they don't want to be, giving this credibility test again and again. So it really is going to be a waiting game, and the waiting game does not rely on what the Bank of Japan does. It really relies on when the Fed makes its first move. A 10 basis points rate hike from the Bank of Japan in July is not going to materially change that weakening trend in the yen. So I think the Japanese authorities are just trying to buy some time to really wait it out for that first Fed rate cut to happen.
Charu Chanana there, global market strategist, head of FX strategy at Saxo. Plenty more ahead, including, of course, a look at the open, a couple of minutes away on the mainland. This is the China Show. Right, we're going into the open today, as you can see, slightly higher actually on futures. I think we're now looking at a multi-week losing streak onshore. We're now effectively flat for the year as we enter the second half. Sectors to watch: rare earths, Apple suppliers, property, very much in focus. And of course, the macro story is this unrelenting rally we're seeing in Chinese government bonds today. The Monday Open is just ahead. This is the China Show. Good morning. Good Monday morning. We are approaching the opening bell onshore. We are, of course, shut on a public holiday here in Hong Kong, July 1st. We're marking the 27th anniversary of the handover, of course. And fittingly enough, interesting juxtaposition when you look at a live shot of Hong Kong there. A city of two weather systems. As you can see, those clouds are looming large against this backdrop of what really looks to be still light blue skies. We'll see what happens, of course, as it pertains to the weather in more ways than one. Welcome back to the show. We're looking at the mainland open here. Maybe a bit of background on certainly the direction of travel here when you look at onshore stocks. Shanghai Composite is down a sixth week, I believe. Let me just count. 7 weeks now, in fact. 7 weeks. 7-week losing streak. The CSI 300 is on 6 weeks, effectively the longest such losing streak on the Shanghai Composite going back about 6 years or so. Not much conviction coming out of the opening bell. We are, of course, a couple of things to watch. Okay, so we now know the date for the third plenum, July 15th to 18th, in case you missed that. In terms of economic numbers that have come through, PMI numbers came in below 50 again, and in about 15 minutes from now, the Caixin numbers are about to tell us maybe some consistency or the lack of that compared to the official numbers coming through. A couple of other things, too. There's been some extreme weather. Particularly in the Heilongjiang province, so in Dongbei, it's been extremely strong rain. I think the authorities have hoisted the highest rainstorm warning signal, which I believe is red, on shore. And yeah, apart from that, I think fittingly enough, when you take a look at what's happening in the CGB space, so you have the 1 and 10 year on your screens. In a moment, you'll see the 30-year yield. Really a good representation, if you will, on the state of the economy. There we go. So we're looking at the April lows are now in sight at about 2.42%. Below that, we're back to levels last seen, I believe, back in 2003 and 2004, if not even before that as well. Quick glance at rare earth stocks on the back of new regulation, this new bill that was passed, of course. And we're looking at some upside there, so that's really one part of the market where you are getting at least some movement and some traction in the early goings. Let's get a sense of where the economy is. And joining us now is Jacqueline Rong, Chief China Economist at BNP Paribas, joining us out of Beijing. Good morning, Jacqueline. The PMI numbers out on the weekend, your initial take on what happened?
Well, I think it shows that the economy is slowing broadly. Because not just the manufacturing PMI is below 50 again, but also the service PMI and construction PMI also softened notably. I think all this, if you take a look at the composite PMI performance in second quarter, I think it's consistent with our view that after a very strong start in Q1 this year, in terms of sequential GDP growth, we think it has slowed down notably from 1.6% in Q1 to probably sub 1% in second quarter.
Hey, Jacqueline, Steve Engle here. I thought manufacturing was supposed to be the strong point of the economy right now, with the consumer so weak, obviously, and also the property market woes. But it doesn't look good now. 49.5, second straight month, and actually 12 out of the last 15 months, the manufacturing official PMI has been below 50. So, looking forward to policy in a couple of weeks with the third plenum, what needs to be done? I know that's a longer-term planning meeting, but again, they need some immediate help.
Well, you're right. I think the third plenum is all about the party spelling out the medium long-term structure reform program. And now it seems at least the four items would be on the agenda, including how to strengthen the party's leadership over the economy and the financial system, and how to build a unified national market, and how to develop the so-called new quality productive force, and probably a series of fiscal and tax reform. I think this policy reform is going to probably help to shape the economy in the next 5 to 10 years, but it's still not going to provide an immediate boost to short-term economic growth. For short-term counter-cyclical measures, probably we need to eye for the Politburo economic meeting, which is usually held in late July.
And your expectations ahead of that specific, the Politburo meeting?
Well, I would expect the Politburo meeting to map out another series of easing measures, including both fiscal and monetary. For fiscal policy, I think so far this year, the issuing pace of government bond has been very, very tardy. In the first 5 months, only 30% of this year's quota has been utilized. So I think pretty much for the third quarter, the instruction from the party might be local government and central government should continue to speak up the issuance pace of this government bond, and as well as the corresponding disbursement of the money. On the monetary side, we do expect that sometime in the third quarter that the PBOC may cut policy rate and RR again, to help Fed reduce the debt servicing burden of the real economy, and to also inject a little bit more liquidity to the banking system to cope with a step up in government bond issuance. At the same time, probably a little bit more policy easing, especially in tier 1 cities where there are still some form of purchase restrictions.
Well, Jacqueline, what needs to be done, if anything, to boost the consumer sentiment? I mean, some of these buy-in program or trade-in programs for appliances and the like haven't really taken off. I didn't think it was necessarily going to be a big bang move anyway. What needs to be done to improve that confidence and get the consumer spending again?
Well, I think first of all, consumer income is actually sort of a lagging indicator of overall economic growth. So if with all this structure, say, economic reform mapped out at a certain time, as well as additional policy easing coming out of the Politburo economic meeting, if that can help to, number one, actually boost the market sentiment, both for a business as well as for the household, and secondly, to really stabilize economic growth, then I think that will pave the way for us to see a gradual stabilization in consumer confidence. Other than that, well, if we are going to see a substantial boost to that, I think probably more transfer payment from the government, either in the form of consumption voucher or a cut in personal income tax, probably will help to boost the consumer sentiment as well.
And that takes us into the housing market question. And, you know, where you are, Beijing became the last major Chinese city to relax its rules around housing. And, you know, you mentioned rates, if they don't fall, they'll certainly remain lower for a lot longer, Jacqueline. And I'm wondering what hasn't been done in the housing market, or do we simply just have to wait and see at this point for things to take effect?
Well, first of all, I think the biggest culprit behind this round of unprecedented property slump is actually very, very dumped consumer confidence. If you take a look at the MBS consumer confidence survey, basically it has been hovering at a multi-decade low. So I think that's probably the biggest issue we need to address here. Apart from that, I think because all this current policy easing, either a cut in mortgage rate or a cut in down payment rate, essentially encourage households to take on more debt to buy property. But that's difficult when consumer confidence is so low. So I would say probably a more impactful measure would be government to expand the government purchase program of public housing. But at the moment, I think all these programs are essentially relying on local government to borrow more from banks to purchase a property. But a lot of local government have their own debt issues. So I would say a powerful measure would probably be central government step in issuing special CGV and use the process to purchase a property from the market. But that will probably, we need to wait until sometime next year.
So, Jacqueline, it sounds like a couple of things that you laid out. It sounds like we perhaps won't get a driver for growth coming out of consumers yet. So that takes us into what first part of my question is, do you think the path for the currency is certainly weaker because of the export pillar that might go away because of tariffs? That's number one. And number two, you mentioned more bonds. Does that mean rates even go lower even further because traders are trying to look for every single reason right now to continue to chase the CGB rally?
Yeah, for the currency, our view is that probably for the third quarter, the currency has more room to go up, say, to something around 7.45. That is the expectation from our strategists, because number one, usually in June and July, we will see very large capital outflow because of dividend payout. And that is usually the time when the PBOC will allow the currency to adjust a little bit higher. Secondly, if you take a look at the strength of dollar because of relatively weak Japanese yen and euro against the dollar, if dollar continues to move up, I think the PBOC will probably feel more comfortable to allow the currency to go higher as well. At the moment, I don't think that the export is going to be a reason that the PBOC is going to allow the currency to adjust much higher, because so far out of the economy, exports is a sector that is seeing the strongest growth, which at the moment does not really need that help from a weaker currency. In terms of interest rate, as I said earlier, we do believe that in both Q3, especially after the Fed started its cutting cycle sometime in December, we think it will open the room for the PBOC to further cut interest rate and cut R, which probably will take the whole yield curve lower.
Jacqueline Rong, have a great week ahead. Hi to your team for us, of course. Chief China economist there at BNP Paribas, joining us out of Beijing this Monday morning. There's plenty more ahead here. You're watching the China Show. Welcome back to the China Show. It is the 27th anniversary of Hong Kong's return to Chinese sovereignty. Bloomberg Originals has been looking at how the city is becoming more aligned with the mainland and what that means for Hong Kong's future.
This was Hong Kong in 2019.
Some estimate that at their peak, 1 to 2 million Hong Kongers turned up to protest in a city of about 7 million people.
Where are they now? For years, Hong Kong showed how capitalism and Western values could coexist with China's wide-ranging economic reform. Now, the protesters are gone. What happened? And what does that mean for the city's future?
5 hours from now, the Union flag will be lowered and the flag of China will fly over Hong Kong.
When Hong Kong was handed back to China after more than 150 years of British colonial rule, Beijing promised a high degree of autonomy in its economic and political systems for 50 years. The city cemented its status as an international financial hub and one of the world's freest economies, bolstered by its rule of law, a free internet and press, and a currency pegged to the US dollar. It was the world's gateway to China's extraordinary industrial boom. But at the same time, tension had been simmering between Beijing and Hong Kong's political opposition, which wanted to expand civil liberties. Beijing continued to resist allowing Hong Kongers the right to choose their own leaders. And then, in 2019, Hong Kong proposed a bill to allow people to be extradited to mainland China to be tried.
And that triggered concerns that Beijing could use this legislation to clamp down on political dissent in Hong Kong.
Although protests began peacefully, the government's unwillingness to completely withdraw the bill caused demonstrations to escalate.
The demands from protesters morphed from just trying to prevent this bill from going through to demanding amnesty for protesters that had been arrested and calls for universal suffrage.
The movement continued through 2020 until
the government decided to roll out very strict pandemic control measures that essentially made it impossible to gather in large groups.
Within months, Beijing imposed a sweeping national security law, which punishes what Chinese authorities describe as secession, subversion, terrorism, and collusion with foreign and external forces. It also asserts broad powers to control sources of opposition.
Authorities then began to arrest people that they alleged were instrumental in the protests. And they also made it essentially impossible for Hong Kong's opposition parties to continue operating.
That also led to the shutdown of several pro-democracy outlets, including Jimmy Lai's newspaper, Apple Daily. It was just too much for some.
Since I left Hong Kong, I witnessed my friends from my industry, including theater actors, visual artists, got arrested or got charged. I felt really scared, and I felt this place is trying to expel its own people.
Jarita and her husband left Hong Kong in 2019 and now live and work in the UK. Some of her students are among the more than 140,000 Hong Kongers who emigrated to the UK after it rolled out a special visa scheme in 2021. Meanwhile, Beijing revamped the body that picks members of Hong Kong's Legislative Council to make sure only pro-China candidates can secure a seat.
Effectively, that meant that Hong Kong's government no longer had an opposition.
And in March this year, Hong Kong introduced its own security legislation. New crimes like treason and insurrection carry life sentences.
The threat to national security is real, so it is important we all bear that in mind, to be on guard all the time.
But it wasn't just increased restriction on free speech and expression, bringing Hong Kong closer to the mainland. Governments on both sides introduced programs to encourage Hong Kongers to study, work, and live in mainland China, and vice versa. Transport links have improved to support this. In 2017, President Xi Jinping unveiled the Greater Bay Area Development Project, an effort to integrate Hong Kong with Macau, Shenzhen, and nearby cities, starting with expanded infrastructure.
Things like the Hong Kong-Zhuhai-Macau Bridge, as well as the West Kowloon Station, which is integrated into Hong Kong's own subway and allows people to travel in less than 20 minutes from the city to Shenzhen.
And trips to mainland China hit record highs earlier this year. Some are embracing the growing ties. Born and raised in Hong Kong, 26-year-old Kaka took a job in Shenzhen after finishing her master's. Now she's working on starting her own business in mainland China.
其實我而家選擇去大陸生活最主要原因真係為咗方便。你出行首先就已經係非常之方便啦，你嗌滴滴啊都已經係好快嘅一件事。平時喺香港可能嗌 Uber 嗰啲又貴啦又慢啦。第二就係俾錢，手機已經解決晒所有嘢。
With access to Chinese apps like WeChat and Alipay, Hong Kongers can now easily make transactions on the mainland. And it's dining and shopping that make up 70% of them.
呢度咧就係我哋今日去嘅第3個景點。哇！呢個米麻薯真係要影翻張相先。
Chinese consumer review platforms like Dianping and Xiaohongshu or Red, where users primarily post in Chinese, also help Hong Kongers navigate Shenzhen. To Kaka, all of this means that she can take advantage of the vastness of China's economy.
真心係好飲喎，即係做 vlogger 我好簡單，就係為咗錢嘅啫。我自己就真係好坦白講啦，我對政治嘅一啲原因，我係冇咁 care 嘅。我唔係唔去了解，唔係唔想去睇，但係我覺得我了解咗，其實我做唔到啲乜嘢。現代氣息係啊。
The dilemma for Beijing is that the crackdown on political dissent has meant that people increasingly view Hong Kong as similar to mainland China. It's its differences that have really secured and underpinned the success of Hong Kong for many, many years, particularly its success as a financial hub.
Change in perception is important for everyone, particularly against a backdrop of geopolitical tensions and a significant economic slowdown on the mainland. Foreign businesses' direct investment into China last year slumped to levels not seen since the early 1990s, as trade frictions between Beijing and the US and its allies rose. Or look at the proceeds raised by companies through an IPO in Hong Kong. They are at their lowest in more than 2 decades. Hong Kong also lost its title of world's freest economy. Beijing needs Hong Kong so Chinese companies can raise money without tight capital controls, and it still has some of the deepest capital markets in Asia. But
one big question is whether Beijing is still getting everything that it needs from Hong Kong if there is a perception that these differences are no longer valuable to people, particularly to foreign investors.
Officials see things differently. Hong Kong Chief Executive John Lee has said the city's status as a financial center is highly stable, with 75% of the world's top 100 banks operating there. Some are optimistic for Hong Kong's future, despite uncertainties in the short term.
呢一兩年好坦白講，我未必話會選擇而家即刻翻香港發展。咁但係未來嘅話咧，我覺得香港只會越嚟越好。咁所以我覺得呢一個翻香港嘅打算絕對會喺我人生裡面發生咯。
But for people like Jarita, leaving the city for good was the answer to her discontent.
If I stay in Hong Kong, maybe I will still have a good career, but it's better that I leave because I don't want myself to be changed. I don't see a future that I like for me in Hong Kong.
And in the next hour of the China Show, we'll get more analysis, a deep dive into the story here with the head of Hong Kong's General Chamber of Commerce, Patrick Yeung, and Hong Kong Democratic Party leader Emily Lau joining us later on. Plenty more ahead. This is Bloomberg. Right, there's a live look at Lujiazui in Shanghai, and that's pretty much really, and apart from that, and of course Shenzhen, where the other exchanges, the only two markets that are up and running in this greater Chinese market. Of course, Hong Kong is shut today. To mention that CSI 300 on the left side of your screens, we're coming off low, still lower for the session though. Volumes are about 8 to 9% lighter than usual. Direction of travel has been down, just to be clear. 6 straight weeks of declines. We're going into a 7th week if things, of course, persist. In terms of data, nothing much encouraging as far as the official PMI numbers were concerned, still in contraction. Although when you look at the private gauge, came in above estimates again, came in above the previous month, so 5 or 6 months of improvement there. Also about 5 or 6 months of a positive surprise out of the Caixin manufacturing PMI numbers. The other market story today is really when you look at European assets, right? So as you can see, the euro is stronger, futures are pointing up, oat futures are also moving to the upside, although it's worth mentioning as well, when you take the move from Friday, we should still be down, of course. Massive move up in yields, and of course it's certainly blowing out in terms of the spreads there over bond yields. More on that in a moment. S&P futures 0.3 to 1%. Asia is also doing, as you can see, 0.2 to 1%, although when you take a sort of step back here, on an index level we're up, although we are mostly mixed across most of these markets. You do have some stocks that, of course, trading heavily weighted, trading to the upside, helping lift the overall benchmark. Asia ex-China, how are things looking? Bonds are on offer, so yields are pushing higher, with the exception of the Chinese 10 and 30-year yields. In fact, when you look at that, we're now extremely close to taking out the April low on the 30-year CGB yield, and below that, you have to go all the way back to 2000 and the early 2000s, effectively, to see yields at about these levels. Apart from that, it's generally a quiet day. It doesn't mean it's a quiet week. Of course, we're bookended by not just the U.S. jobs report. As you go into the weekend, it's round 2 of French elections, and of course, UK elections are also on deck as well. To map out the week for us, Mark Cranfield, our MLive strategist, is with us right now to talk us through his thoughts as we move into a fresh trading week. Mark, top of mind for you, sir, what is?
Well, actually, probably the most significant thing that we've seen so far today is the Tankan report out of Japan, because I think that pretty much seals the deal for the Bank of Japan to raise interest rates later this month, and that has huge implications for bond markets globally. Although the people are feeling that the Fed's next move is to lower rates, ECB has already done that, and there might be some relief from the first round of the French elections. Globally, G10 bonds have not had to deal with a seriously negative Japanese bond market for a couple of decades. It's just not something they've had to price in at all. And here we are, we're building up towards the possibility that yields are going to go up quite a bit more in Japan, and we've barely got started. So now we've had a solid Tankan report on top of strong industrial production. Inflation is going in the direction the Bank of Japan needs, and the yen is extremely weak. All of those factors certainly give the Bank of Japan the room to do another interest rate hike at the end of this month. And on top of that, the 2-year yield in Japan is finally pricing in a rate hike. It is very unusual for any central bank to raise rates unless the market is giving them the room to do it. And finally, the Japanese domestic market is pricing for higher rates. So that's another signal that the central bank has room to do it. This is not fully acknowledged by the rest of the G10 markets. So they will need to get ready for Japanese yields, probably in the second half of the as we're just starting the second half of the year. Yields could go significantly higher in Japan, and that is not really factored in to the US market, to the European markets, other parts of the world.
And Mark, it's not factored in at the yen right now, at testing 161 again, as that yield differential with the U.S. supposedly narrows. If the U.S. is going to go ahead and cut, like we saw, you know, this PCE core inflation index essentially rising by the least amount in 6 months. So you're having that divergence, if you will, come down a little bit potentially, but the yen stubbornly at 160 and change.
That's certainly how traders are playing it. You can see the latest CFTC data showed that leverage traders have shorted the yen even more. They're increasing their negative outlook on the Japanese yen, even though it's already risen, as you say, to the highest levels we've seen since the 1980s, or the dollar yen is the highest since the 1980s. So there's no pushback at all from the market. And it's because at the moment they see the risks very much skewed to one side. They see the United States side of the equation driving the whole picture. So US rates are higher, stayed high for longer. Bank of Japan has been quite slow to respond. So traders feel quite confident that the US dollar is going to remain a very strong currency for much longer, and the yen is the worst aspect. From the other side of it, it's cheaper to short the yen, so traders are continuing to do that. What they're not ready for is for the Bank of Japan to step into the equation and for them to tighten policy more than expected and to cut bond buying at the same time. There is a decent chance now that the Bank of Japan will use this window to show quite a strong tightening move at the end of July.
160.87 where we stand right now. Mark Cranfield, Bloomberg MLive strategist, joining us there. Thanks so much. All right, well, coming up, Hong Kong is marking the 27th anniversary of its return to China. We'll be looking at the city's changing political and business landscape with our special 2 guests coming up next. This is Bloomberg.
We fulfilled the constitutional responsibility of local national security law legislation under Article 23 of the Basic Law, completing an historic mission that we had waited for 26 years, 8 months and 19 days. We completed the implementation of district rule and the principle of patriots administering Hong Kong.
Yeah, that was from about, I would say about an hour back. That was Hong Kong Chief Executive John Lee speaking at the ceremonies marking the 27th anniversary, of course, 27 years since the city's return to Chinese sovereignty, which is why we're not trading in Hong Kong today. So it's a public holiday here in the city. I think we also have a couple of things online. I think you know, the trams are free. I think you have some discounts across, I think, some of the theme park. I think Ocean Park is a discount there as well. Sliding that in just in case you're wondering what to do in this hot weather. Also, this is actually just coming through from July 10th, permanent residents of Hong Kong and Macau who are not Chinese citizens can apply for a 5-year permit to enter mainland China. So you don't have to be a Chinese national. All you have to be is a permanent resident. You get that after 7 years. And you can now apply for a multiple entry permit into mainland China and stay no longer than 90 days during every visit. And certainly on that very theme, Bloomberg Originals has been looking at this broader narrative, looking at how the city is becoming more aligned with the mainland and what that means for the city's future as an Asian financial hub.
When Hong Kong was handed back to China after more than 150 years of British colonial rule, Beijing promised a high degree of autonomy in its economic and political systems for 50 years. the city cemented its status as an international financial hub and one of the world's freest economies, bolstered by its rule of law, a free internet and press, and a currency pegged to the US dollar. But at the same time, tension had been simmering between Beijing and Hong Kong's political opposition, which wanted to expand civil liberties. In March this year, Hong Kong introduced its own security legislation. New crimes like treason and insurrection carry life sentences.
The threat to national security is real.
But it wasn't just increased restriction on free speech and expression, bringing Hong Kong closer to the mainland. In 2017, President Xi Jinping unveiled the Greater Bay Area Development Project, an effort to integrate Hong Kong with Macau, Shenzhen, and nearby cities.
The dilemma for Beijing is that the crackdown on political dissent has meant that people increasingly view Hong Kong as similar to mainland China. It's its differences that have really secured and underpinned the success of Hong Kong for many, many years.
And subscribers can see that documentary in full now on the terminal on Bloomberg.com, and it's also available on their Bloomberg Originals YouTube channel. Let's get more on the 27th anniversary of the handover from China, obviously, Hong Kong's future. Joining us now is Hong Kong Democratic Party member Emily Lau, and she's also a former Hong Kong lawmaker. And also with us is Patrick Yeung, CEO of the Hong Kong General Chamber of Commerce. Thank you for joining us in this half-circle roundtable. Okay, so 27 years on. I've been here 33 years. I first moved to Hong Kong. I've seen a lot of change. What do you think? Same question to both of you. What is the biggest change 27 years on after 1997? Emily, maybe I'll start with you.
Well, many of my party colleagues and friends are in prison as we speak, and some have been there for a number of years, not even finished with their trial. This is something that Hong Kong people are not that used to. We hope that Hong Kong will have the rule of law, independence of the judiciary, a free and vibrant civil society where people can march, can assemble, can demonstrate, like we have done for many, many times since 1997. But all those things have disappeared. And many civil society groups have either dissolved, or they are in prison, or have fled overseas. My party is probably one of the very few that are still left remaining here, but we were not allowed to take part in elections last year. So I think the important part about one country, two systems is the diversity, the tolerance of different views, rule of law, freedom of speech, freedom of conscience, freedom of association, freedom of expression. I'm pleased that Bloomberg is able to have this discussion. I hope you won't get into trouble. Don't be scared, my friend.
No, not at all. Again,
well, I hope so too.
We covered all the protests very fairly, giving all sides, including you. You were in Hong Kong on edge as well. Patrick, let me swing it over to you. What differences do you see, and what is needed to get the economy back on track?
Well, Hong Kong has always been a very important international business metropolis. And over the last 27 years, we have seen the beginning of one country, two system, and Hong Kong have been trying to see how Hong Kong best role to fit into this new model, which Hong Kong plays an important and integral part. Over the last 27 years, Hong Kong, obviously, it is a very small open economy. And all the things happening around the world, be it the Asia financial crisis in 98, the bubble of the internet in year 2000, and then unfortunately SARS, and then followed by the financial tsunami in 2008, and then in 2014 we have Occupy Central, and then 2019 we have the social unrest. And the world economy has changed so much. But Hong Kong has been resilient in its way, trying to come back every time all these world changes is affecting Hong Kong. And I see that Hong Kong Road as a connector has always been a very successful middleman. And under this one country, two system, you see that the stock market, when back in 1997, we have only 600 listed companies. And now we have close to 2,700. in terms of market capitalization, in 1997, it was a 3.2 trillion, and now it's a tenfold, 32 trillion. And you look at foreign companies having their headquarters both in mainland and overseas. The number of these companies back to 2001, about 4,000 something, and we have 9,000. And again, I mentioned about this important role of Hong Kong being the connector. The number of mainland companies which had headquarters back in mainland but have established in Hong Kong and leveraging on Hong Kong advantages to go overseas international, the number has grown from 70 to 290, close to 300. And you also see that the foreign companies, including the Japanese, UK, the American companies, still maintain a very strong presence in Hong Kong. So from a business perspective, Hong Kong continue to play a very important role under this one country, two system, which are now Hong Kong, to play a very important integral part of connecting both the mainland and the rest of the world.
As a global financial hub, and as a follow-up to you, Patrick, I think we've heard, just as an example, like Jamie Dimon, CEO of JP Morgan, I'm paraphrasing what he said, but effectively for the bank itself, from a risk perspective, they look at Hong Kong and mainland China as one. And I'm wondering whether the perceived proximity to Beijing, from a risk perspective, do you think some of these overseas companies are overthinking that, or do you think there is that rethink or reclassification of Hong Kong has its merits too?
Each organization, whether it's American company or European company or Hong Kong company, would have to think of where would be best for their business to grow. And if you have chosen Hong Kong, Hong Kong has all the great advantage. I mentioned about the one country, two system, and then the very simple low tax rate, and then the ease of the flow of people, capital, and this allowed the business to have a very good platform it would grow the business that really matches their own strategies and objectives. They all have different considerations, no doubt, and they would have different of what product and services they would like to offer, what will be offering the best for them. And then don't forget, Hong Kong, even though have returned to the motherland for 27 years, Hong Kong is the most international in terms of, if you're specifically talking about financial, we are the biggest offshore renminbi center here. So if you compare the other cities in the mainland, some may say, oh, you're the same as Shanghai and Shenzhen. Right. But we are not because we have this one country system, we have very good legal system, a rule of law, of which the Western world get used to understand and have been practicing in Hong Kong even before Hong Kong returned to motherland 27 years ago.
Right. And I think you might have some thoughts, of course, on this conversation, Emily.
Well, actually, Hong Kong's in the past, our trading partners used to be the West, America and Europe and those G7 countries and so on. Now it seems we're turning to the Belt and Road countries. I don't mind. I want all kinds of people to come here. But we want to welcome people from our, traditional trading partners to come. How come those people are not coming? You just walk in the street and people kept telling me, hey, there are so few Western tourists and so on. So we want Hong Kong go back to the days when there's diversity, there's tolerance of different views, where my party and other parties, trade unions, all can exist and can demonstrate. Used to have big demonstrations on July 1st. Today, you look at the streets, they are empty, my friend. They are empty.
Emily, do you think that there is room over the next 23 years until we hit that 50-year mark of one country, two systems experiment, that the overcorrection legally that can maybe come back to the center a little bit?
My friend, I won't be around in 23 years. You will be. But I think we want the correction to come sooner rather than later. And the real thing that makes Hong Kong tick to be a vibrant and safe and free city ever since 1997 has been self-restraint on the part of Beijing. For many years, Beijing left us alone because they trusted Tung Chee-hwa and so on. And we were allowed to carry on our business. But now, in the in the mind of President Xi Jinping and others, the top concern is national security. Here in Hong Kong, we've got the national security law already. We got legislation on Article 23 of the Basic Law. So I want to tell the President that Hong Kong is now under control. I don't think we're going to see the chaos that we saw in 2019. And many people, they understood it. And some have already left. Others are in prison. So I think it's time for Beijing to adopt a more relaxed policy so that business can thrive. Some business people, in spite of what Patrick said, they are also worried. Even when they do research on business, that may infringe theft of a state secret. There are all these red lines which business people, professional people, politicians, journalists don't know where they are.
Well, what's the business lobby saying to the central government and also John Lee about relaxing, as Emily has just outlined?
Geopolitical developments actually not affect Hong Kong only, but on the global basis. And that I think businesses in Hong Kong, plus the international chambers, which we continue this having conversation with, they're more concerned about the world geopolitical situation rather than our own local Hong Kong political situation here. For the businesses, they are really thinking of doing business here, trying to get the biggest return to their stakeholders, shareholders. They agreed with Emily that we've got a very vibrant and safe place to operate. And Hong Kong is a very safe city, and Hong Kong is very vibrant. If you look at the Americans living in Hong Kong, the numbers are actually more than before 2019. This is not my figures, this is American, the government official figures. There should be more than 86,000 Americans living in Hong Kong. So if Westerners are seeing Hong Kong not as safe, not as vibrant, not a way of doing business, purely from a business perspective, then these numbers should have dropped. The American companies, plus other companies, should also disappearing. But this is not the case. We are seeing, in particular, you mentioned about doing trade with our old partners, so-called. If you look at the first 5 month trade figures, Hong Kong have done very well. Well, some may argue that it's from low base from last year. But even taking out that low base factors, we are still at 12.5% growth to America. Obviously, the trade to the mainland is still counted #1. And that's why the importance of Hong Kong and the mainland in Hong Kong continue to play this role of being the most international city, or continue to build on the Hong Kong success and the strength of all these traditional economies, and how we're going to transform it into the new economy in welcoming a more sustainable growth.
Yeah, I was actually going to ask you, like, if you took a poll among your members, do you think they'd agree or would disagree about the state of the economy being robust right now? Case in point, for example, to Emily's point, you walk around, there's not a lot of people walking around. Might be the fact that, on long weekends like this, and this is the broader conversation, Hong Kong has become a bigger part of the GBA infrastructure. So most people go north, do their spending there. In what way do you think Hong Kong businesses that cater to a local economy need to change their strategies? Because certainly things have changed from that perspective at the very least.
Yeah. I think Hong Kong is going through a very important transformation. I just mentioned about quoted some trade figures, which actually is moving into the right directions. Because other than the trade with the mainland is increasing, the trade with America is also seeing very positive sign. The other new markets that the current government have been working very hard to build up, including ASEAN, the Middle East. We see very robust growth to Malaysia and Vietnam. And Hong Kong is still by large the very important electrical components. And then 60%, about 60 to 70% of our exports are actually electronic components. And these are continue to build a very important part. So if trade is coming back in a more normal way, and then new markets being developed, and then the new markets being developed this time, and with time we'll be able to continue to ride on this success to move forward to the more promising new future, talking about all these AI technology, big data, etc.
But a lot. You go ahead, Dave.
Yeah, although you didn't answer my question on how the local businesses need to adapt to this reality that things are more integrated, of course, with things on the other side of the border.
Well, local business have to follow the trend.
Right.
All these trade figures are probably 90% are from the local business. And then in the budget, this year budget, the Finance Secretary they put a lot of funds to help the SMEs,
right.
which constitute a big part of the economic the pillars. And many of these SMEs are not ready, or they haven't yet really got to the stage of digitization, and then how to make use of digitization to go for digitalization transformation.
Right.
And this is very much needed in helping the economy to riding on the technological breakthrough and also the support from the government to help them to move forward so that they remain competitive.
That's fair.
Emily, I mean, do you agree with some of the things that are being said here? Obviously, a lot of the innovation that was born here in Hong Kong went across the border. I mean, the future is tied to GBA, or can Hong Kong be what it was?
Well, I'm not against, being tied to GPA, or we are always part of China. But I think the important thing about Hong Kong is one country, two systems, which the other GPA cities do not have. And the leaders in Beijing kept repeating that it is very important that Hong Kong should have one country, two system up to 2047. So what is it? What is the essence of one country, two systems, which sets us apart from other cities in the GPA and in mainland China? It's the rule of law. It's freedom. It's diversity. All these things that we are losing. And a vibrant civil society would be the hallmark of such one country, two systems. So that's why. And I don't think having those things back would work against Hong Kong development. And we also want to see, people from all these countries, Southeast Asia, Middle East, coming to trade, no problem. But we want to see people who have left Hong Kong, maybe 300,000, to come back. These are our people. They are educated here. They are professional people. They are the backbone of our economy. And that's why some of the companies are suffering, because they've lost the managers, the professionals. So we have to change that. And I hope the business community would not be against having a more relaxed environment.
Sorry, we have to leave it there. We're running out of time. We can continue this, suffice to say, for a couple of more hours. Joining us here, of course, on sets, Emily Lam and, of course, Patrick Yeung there on this roundtable in Hong Kong. The Hong Kong edition newsletter on your screens. This is Bloomberg. Right, it's 11:29 in the land of not just a rising sun, rising inflation, rising exchange rate, 161 on dollar yen. We touched that. We were briefly above that, of course, at some point this morning. 2- and 10-year yields, and as Mark Cranfield from our MLive team pointed out earlier on, it's rare that you see the short end of the curve actually starting to really price a hike. A hike from the BOJ that's coming. And it's worth noting, of course, it's the first of the month. That BOJ meeting is on the last day of July. And certainly the Tankan survey, which we'll get to a bit later on in the show, really underscored the change in sentiment, business confidence, capex, inflation expectations, exchange rate expectations that's taking place under the hood in corporate Japan. Right? So certainly there's a lot to unpack as far as the Japanese story is concerned. It's also worth noting as we go into the second half of this year that the Topics Index is one of the best performing benchmarks year to date. So does that continue? I think we were up 18% in the first half. Speaking of changes in the Japanese narrative, one of Warren Buffett's favorite Japanese trading houses says a weaker currency has actually some upside for their company. But certainly there are concerns for the future of Japan. Our colleague Sherry An spoke exclusively with Sumitomo CEO Shingo Ueno about the firm's strategy, expansion plans amid this weakening currency.
Last 3 years, we have been working for the structural reform. So now it's changed the mood. I would like to change the mood from defense to offense. So in other words, we will have to realize the dramatic growth in next 3 years. That's why I try to change our company's mindset. Then the main theme is number one in each business line. So that's a kind of that mindset. But at the same time, I would like to, accelerate the reallocation of our management resources into the focus area. That's the main part.
Tell us a little bit about those focus areas, because as you said, you have so many different business lines.
Exactly. That's right. Yes, there are, especially there are 8 business lines: real estate or steel businesses, healthcare, agriculture, so many things. Just I pick up 3 examples. One is agriculture business, agri businesses. We are doing the fertilizer or biochemical that we will expand to the seed cells, or in addition to that, the other type of the agricultural products we are now selling in Latin America, in Europe, and we would like to expand. That's the first one. And second one is the construction machinery businesses. Historically, we have been working in Canada and the United States. It's a sales and also the rental business. The rental business will be expanded to the Singapore and other Southeast countries, and then we are targeting to the Europe. That's the second one. The third one is the real estate that we would like to develop that the city or urban development project centered on real estate. That's what we are targeting. All those 3 has the strengths, experience, or competitive advantage.
When you're talking about expansion in your business,
yes.
Are we talking about growth coming organically or even through M&As?
Even through M&A.
How would a very cheap Japanese yen play into that strategy? Because M&As become more expensive when the yen is this weak.
Exactly. However, we just count on that dollar basis. So that's why nothing changed, regardless of the yen depreciation or appreciations. We would like to see what is the value in dollar, and then we will decide to invest into those businesses or not. So then, at the same time, the businesses where we are confident will increase the corporate value, that company's value. Then we decided to go into the investment.
Does that mean that so far you're not seeing a meaningful impact from the depreciation of the yen?
I don't think so.
Do you expect to see more meaningful impact? Because I know that your yen assumption for until March of 2025 was 140. We're around 160 and people are talking about 170.
I know. When I made that midterm plan, our assumption was that the U.S.-Japan interest gap will be narrower at that time. But actually, as you said, that the yen is depreciated further. So I'm not sure what will happen in the future. But I think the interest gap will be slowly narrower, and then yen depreciation maybe change to the appreciations. But I think it is good for our company to some extent, because that the yen is depreciated, and 1 yen maybe how much? 2 billion? No, 2 billion yen increase.
A depreciation of 1 yen would actually equal to 2 billion yen
2 billion increase
in profit.
In profit. However, such a prolonged, say, Japanese yen depreciation will not good for the country's strengths in the long run,
And that was the CEO of Sumitomo speaking exclusively with, of course, Sherry there in Tokyo. And one of the things they were talking about in that last bit was really what the exchange rate assumption is for a company like Sumitomo. When you look at the latest Tankan survey, and they also track exchange rate expectations among corporates, we've really gone up that ladder from about 141, I think the terminal chart's coming up on your screens. For Bloomberg clients, you can check this out too, to about 145 right now. That is the current expectation of a weaker currency amid, of course, this weakness that is persisting in the currency itself. We are now looking at confidence among Japan's large manufacturers, of course. That is the Tankan survey, has jumped also. So on a sentiment basis, on an exchange rate basis, on inflation expectations basis, things are starting to move really in the direction of, does this economy need another rate hike? Joining us to talk us through that is Taro Kimura, senior Japan economist and senior Asia reporter, also joining us, Hideyuki Sano, to talk us through the market angle to this. Taro, let me start with you because you've already published your reaction to the latest Tankan survey. Take us through how you're thinking about the latest survey.
Right. The sentiment itself is a kind of mixed bag. Manufacturing edged up and non-manufacturing edged down. So the non-manufacturing part probably suggests like cost of living crunch is squeezing household spending. And so that's probably a negative signal for Japan's economy. That said, still more firms are expecting better mood for businesses. And also, what is more important for the BOJ's policy decision is inflation-related gauges. For example, firms answered they have risen their product prices from the first quarter, and also they signal they will raise even higher for the third quarter. And the reading was pronounced for the service providers. I think that's the signal which the Bank of Japan has long been wanted for, not only UEDA, but for decades the Bank of Japan's governor has wanted for. So that's why, to my eyes, things are going consistent with BOJ's expectation, and that's why will open the case for the July's hike in BOJ's policy rate target.
So it's pretty much baked in now. You think that Tankan supports the case for a hike later this month, at the end of this month?
Right, I think so. What the BOJ has been saying that they will raise rates if the inflation data or wage data turns out what the Bank of Japan forecasts right now, and it actually reveals that the picture, which is totally consistent with the Bank of Japan has been saying since its March pivot. Therefore, I think it's natural for them when July is a meeting where they update their forecast. So with this update, to me, it's likely that the BOJ will raise rates at the end of this month meeting, on top of the kickoff of quantitative tightening.
All right, but Hide, I'll bring you in on the market angle here. Certainly, the market has done well again. I mean, the first half, I think we were up 18% on the Topics Index. What are expectations now moving forward?
Right. So I'd like to introduce the results of our latest survey here.
Yeah.
So analysts are expecting the topics to rise to something like 2890. So that's just only about 2% from the current levels. That doesn't sound much, but on the other hand, the historic high is slightly below that level. So that means basically analysts are expecting the market to hit the new high, record high by the end of the year. And that also goes for the Nikkei. They expect the Nikkei to rise to 41,500. That's going to be above its March high. So during the second half of this year, basically investors are expecting the market to rise only a little, but still enough to reach historic highs.
Well, Hideyuki, Steve Engle here. What are we seeing as far as foreign investor interest in Japanese stocks, and how does that extremely weak yen factor in?
Yeah, I mean, that has been a point of discussion, and foreign investors have been selling Japanese stocks in recent weeks. And one of the reasons that has been often cited is the yen's weakness, which actually undermines their dollar-based returns. On the other hand, the market has been supported by buying from domestic investors, and I think this is quite unusual for the Japanese market. Because when you normally, when you see foreign investors selling Japanese stocks for 5 weeks, then you would expect the Nikkei to fall quite a lot. But that hasn't happened. Actually, the topics just hit 34-year high today. So the foreign investors have been selling, but that hasn't made such a huge impact as before on the market.
And Hide, any other thing we haven't talked about yet as far as your survey is concerned? Any other key areas of focus we should be attuned to as we go into the next half?
Right. So Taro-san just said that the BOJ is likely to raise interest rates this month, and I think that's what many people in the markets are expecting as well. The interesting point from here is how the BOJ is going to navigate this environment, especially when the domestic economy seems to be very weak. The Tankan survey did show very strong business sentiment among Japanese companies, but one thing I can note is that the diffusion index of non-manufacturers dipped a little bit for the first time in many quarters. I mean, the level of DI is still very high, and actually non-manufacturers are still much more bullish than manufacturers. But for some people who are worried about the weak softness of domestic consumption, this is not a good sign. This could be a sign that the strong sentiment may be losing momentum. So it's really the key here is the strength or the lack of strength of domestic consumption going forward. Right. And the assumption here is that the wage growth is likely to translate to a stronger consumption, but that needs to be tested.
All right, gentlemen, thanks so much. Bloomberg senior Japan economist Taro Kimura and senior Asia stock reporter Hideyuki Sano. Plenty more ahead. David and Steve will be right back here on The China Show. This
with
is
a special song, maybe. Here are some of the other big stories we're tracking at this point, just getting you guys up to speed here. Let's start things off with the Boeing stories. The sources say that the U.S. Justice Department will charge Boeing with criminal fraud over the 2 fatal 737 MAX crashes, leaving the plane maker to now choose between pleading guilty or going to trial. Now, we're told the DOJ will also fine the company more than $240 million and order 3 years of corporate monitoring. Now, a lawyer for the crash victims' families says a sweetheart deal. It is a sweetheart deal for the company. Let me rephrase that. Now, BlackRock is buying private capital database provider Preqin for about $3.2 billion. That's in cash. Now, BlackRock says it expects to close the deal before the end of this year. Preqin founder Mark O'Hare will join BlackRock as a vice chair after the deal closes. Now, just keep in mind, a kind reminder, of course, that Preqin competes with Bloomberg LP, the parent company of Bloomberg News. Now, Anglo American has suspended production at its coking coal mine in the Australian state of Queensland due to an underground fire. The company says all workers were safely evacuated from the Grosvenor mine after coal gas ignited on Saturday. Now, residents of nearby towns have been also warned to stay indoors as thick smoke pours from the mine.
Well, regulators in Asia are tightening the screws on trades popular among hedge funds in an attempt to stabilize markets, but some worry that the move may end up stifling key strategies. For more on this, let's bring in our Asia equities reporter, Winnie Xu. Winnie, good morning to you. Why are we seeing these restrictions coming throughout Asia?
Morning, Stephen. So just like you said, regulators are here to try to help stabilize the markets. And for these markets specifically, you know, with Thailand and China, South Korea, we are seeing some volatility in the markets. And that has prompted regulators to feel like this is the time that they need to start tightening some of the rules. So, for example, with Thailand, we saw that regulators the other day say that they're going to have some rules around the high frequency trading to to have these traders register before actually putting the orders ahead. And that comes as Thailand market really struggles this year, as it already slumped about 8% this year, making it one of the worst Asian markets this year. And also with China's clampdown, if you still remember, back in January, that was when the Chinese stock market actually fell to multi-year lows. So these are the timings that we're seeing for regulators to come in to try to tame that volatility in these markets.
Well, Winnie, give us some background too. What has been, if we've seen anything pronounced, what has been the impact of these restrictions?
Right. So with that, with the purpose of helping to stabilize the market in mind, we're actually seeing some of the short-term side effects as these regulations will kind of hurt the liquidity and the efficiency of the market to some extent for these hedge funds. And hence, we're seeing some slowness in traffic volumes increase. We're seeing the traffic volume also decreasing, and the valuation of these markets are impacted as well. However, one of the examples that we can see is from South Korea's short selling ban. MSCI the other day actually rejected the country's bid for it to become to be seen as a developed market, and MSCI is putting South Korea still as an emerging market, citing that the prohibition of short selling is actually not good for the market, as this is actually seen as one of the most common trading strategies. So while we are seeing some of these negative short-term effects, some buy sides are actually saying that longer term, a good regulation helps to create a more stable and transparent market, and that's good for long-term, long-only investors as they see more attractiveness in the markets.
Well, Winnie, speaking about long-term, are we expected to see more restrictions in various areas across Asia going forward?
Actually, the trend is likely to continue just because we're seeing so much the development in artificial intelligence these days, and that leads to the development of more complicated trading strategies. So regulators actually have to speed up and to be able to make sure that they have a better regulated market. And also in terms of regions, some strategists are telling us that we might see those in smaller markets, for example, Malaysia, that has similar combination when it comes to performance and volatility, similar to those of South Korea and China, for example. And we're going to see less of those regulations when it comes to larger economies like Japan or even Singapore, that's more aligned with the global standards already.
Winnie, thank you so much. Winnie Su, our Asia equities reporter there. Still ahead, we're staying on markets and we're looking at Chinese media. When you look across some of these papers, they do see brighter days ahead for stocks. Find out why in our China brief just ahead. This is The China Show.
And welcome back. Here's your China brief, a look at what's making headlines in the national media in China. Look at the financial papers. The China Securities Journal says the government is planning more measures to attract and stabilize foreign investment. The report says that includes revising the list of industries where foreign investment is encouraged and further opening up the services sector. Meanwhile, the Shanghai Securities News has an item on reforms to the loan prime rates, the LPR. The article cites market watchers saying the LPRs will probably be linked to the PBOC's 7-day reverse repurchase rate, bank deposits, and government bond yields. PBOC Governor Pan Gong-sheng had hinted that the LPR may not need to be pegged to the medium-term lending facility in the future. And the paper also sounding an optimistic note on stocks in the third quarter. It says A shares will benefit from clearer policy signals, measures to stabilize growth, and long-term fund inflows. It also sees a liquidity turning point for stocks this month, saying investors are regaining their enthusiasm.
Yeah, well, if analysts are correct, so what we've done is we've taken a look at individual bottom-up price targets for individual stocks across these benchmarks. And if you take an index view based on those targets, what you get is this. You get an implied upside. This is over 12 months, not 6 months, though. This time next year, 30% higher on Chinese equity markets, give or take. Let's see if they're correct on these things, according to analysts. Right, so that's a preview at least, and based on the conversations around a brighter outlook for stocks here. Big movers to tell you about Sichuan Tianwei, and the story here, I'll just spend my time on this here. The chairman is under investigation. The company isn't aware for the reason behind the probe. That's according to a statement to the Shanghai Stock Exchange. We'll leave you to look at assets over in Europe, and it's looking favorable. Oat futures are up, equity futures are up, and the euro is up against virtually every single one of its peers in early Monday. This is the China Show.